Welcome to the Wall Street Exclusive Daily Show. I'm Joe Springer, helping you make informed decisions so you can succeed in the market. I have three great pieces of information for you today. The first is if you're an activist investor, if you're an active investor looking for doubles and triples, I have a great piece of information for you. I will give you 6 sustainable competitive advantages to look for. Number 2, if you're a passive investor and you say, hey, I don't have the time or the will or the stomach to try to beat the market, I'm going to give you a way to be a passive investor and I still think you're going to beat the market. Number 3, if you're an income investor, I'm going to give you some crucial information about big dividends. Who doesn't like big dividends? If you have any questions about this show or anything else you'd like to ask about investing, email questions@streetexclusive.com. Let's get started. If you're an active investor and you're looking for mispricings in the market, you want the next double, you want the next triple, you're looking for sustainable competitive advantages. I'm very proud and thankful to say that this week I won one of Seeking Alpha's Outstanding Performance Awards that they give out twice a week. They're perhaps the #1 stock research site in the world, so I'm very proud of that. And today they gave me that award for an article I wrote 2 years ago called 3 Reasons Travel Centers of America Could Triple. Well, you know what? Travel Centers of America just about tripled, so they gave me the award. There's that one almost tripled. If you watched the video on the insider buying the other day, there's 3 more stocks that tripled on average. If you've read some of my other articles, I've had some other good picks too. And if you go to the Daily Double at thewallstreetexclusive.com, you can see some more picks that I have that I think are going to double and triple. So I've had some good picks. I want to suggest it's not by accident. And on this show, I'm going to share with you everything I know. So here we go. What do we know so far? If you watch some of these videos already, the one where Samson asked about Bank of America and we said, listen to Warren Buffett. It's a big advantage to not be a billionaire, so don't look at those big stocks. Okay, so we're looking at the smaller stocks in general. We talked about the insiders, so make sure that insiders are not selling out, or if they're buying, that's all the better. Okay, so we're looking at relatively small stocks where the insiders are on our side. And then, okay, so what is a good business? A good business makes lots of money, makes lots of profits. But it's not enough to make lots of profits, because if your neighbor is selling lemonade for $100 a cup and making $1 million a day, you're going to go out there and start selling it for $99 a cup and making $999,000 a day. And you're going to keep doing that, and people are going to keep lowering it until the business is no longer good. There's no reason you can't go out there and sell lemonade. Your neighbor needs a sustainable competitive advantage. Okay, so the idea is it's a competitive economy. If you're going to make bank, someone's going to move in, you've got to have a way of keeping them out. That's what Warren Buffett called a moat, a sustainable competitive advantage. So here are 6 sustainable competitive advantages. Number 1, irreplaceable assets. Travel Centers of America, for example, operates irreplaceable travel centers along the interstate highway. These are hard to get, all the good locations are taken, it's hard to get new locations, so hey, they have irreplaceable assets. Martin Marietta has irreplaceable local assets we saw in those local rock quarries. If you can't bring in stone from out of state, it doesn't make any financial sense. They have irreplaceable assets. That's a great business. They have sustainable competitive advantages. Compass Minerals we'll talk about in the income and the dividend part. They have they have like the best salt deposit. They've got a great mineral deposit. If you have the best mine, no one else can have that as good as a mine. You have the best irreplaceable assets. So you need sustainable competitive advantages. Number 1 is irreplaceable assets. Number 2 is patents. You can have intellectual property, patents. This is why biotechs are so popular. If you saw the video with the insiders the other day, Zeltiq, Mankind, and Fold were all biotechs. Zeltiq's a medical device company, but they all have their patents and they all have their way of protecting everybody. If you've read my articles on tonics, this is why I like tonics so much. They have patents that should keep their profits bulletproof for like 15 or 20 years. So number 1, irreplaceable assets. Number 2, patents and intellectual property. There's 2 excellent ways to keep people from moving into your business. Number 3, a regulatory advantage, permit or approval. This is sort of like, this sort of plays into 1 and 2 because this can play into patents and irreplaceable assets. But like, for example, a utility is a regulated utility. You can't go sell your own electricity to the locals. The utility has a deal with the government. Travel centers, they have the irreplaceable assets sort of because it's hard to get permits for a new one. Same with Martin Marietta. Nobody wants another rock quarry around, hard to get a new permit. Okay. And so and then also if you're licensed to do something dangerous, radioactive, hazardous, forget it. The government is not dying to hand out more approvals for people to get into that business. So if you already have a regulatory approval, that's a very good thing. So that's a third sustainable advantage, regulatory approvals. Number 4, proprietary products. Michaels, for example, we saw makes half of its own products and sells the other half are products that other companies make. Okay, so no one else is selling those products. How could anybody else? If no one else is selling them, how could anybody else make money on those? So and with Michaels, they're already the established largest producer and distributor. They have economies of scale. So if you're already entrenched and you're selling proprietary products, that's a good mix. Number 5 is customer captivity. This is one that you may be captive to some of the people in your life. You may be a captive customer to them. This is where the costs or risks of switching are high. This is where there's highly individualized service, where the cost of an error is very high and trust is needed. So this would be like if you go to your doctor, you've been going to your doctor for 20 years, or your hairstylist, or your financial advisor, or your lawyer. There's someone else that's also offering medical services and hairstyling services and financial services and legal services. But if you've been with your person for 20 years, you may be a captive customer, and so you may not want to leave. So like Apple and Telconet, they have their ecosystems. Once you have your Apple device, you have your songs in iTunes, and now they're playing on all of your computer and your iPad and your iPhone. It's hard to get out of that. You're a captive customer. If you leave and go to Chrome, you might lose all your stuff. If you leave Telconet, you've already got a sunken cost where you've already paid for the installation. You don't want to leave. You're a captive customer. So number 5 is captive customers. Number 6 is people. Here's a tricky one. So if you have a really talented person at your company, is that a competitive advantage? Only if it's the very top person as an owner. So if you are Jeff Bezos, or if you have Steve Jobs or Gates or Benioff at your company, and they're the head person and they're a part owner, that's great. They'll work harder, they have all the creative stuff. But if they're an employee, somebody else can hire them away, so you must pay them what they're worth. They're no longer a competitive advantage for you. You're gonna have to pay them a lot or lose them. Okay, profits are not enough. A good business has to have sustainable competitive advantages. They were, number 1, irreplaceable assets. Number 2, patents. Number 3, regulatory advantage, permits, approvals, stuff like that. We should also say in there another reason for biotechs, and that one is the FDA approval. So even if you don't have a patented drug, you could be the only one approved by the FDA. Number 4 was proprietary products, especially when you're the entrenched player with economies of scale. Number 5 was customer captivity. And number 6 was if you do have a special talent and they're the owner, now you've got a competitive advantage, a sustainable competitive advantage, because you're the guy that has Steve Jobs, and you can bet on that stock because they have Jobs or they have Gates or whatever. Okay, these are all things we look for in the stocks we add to the Daily Double portfolio. Go to streetexclusive.com and click on the Daily Double, and you can try the 3-week trial for $3. We'll be right back with what to do, how to beat the market if you're a passive investor, so don't miss that.